The world as you know it is walking directly into a financial trap that most people are completely blind to right now. The failure of the Iran-U.S. deal and the chaos in Lebanon are not just headlines. They are the triggers for a global economic reset.
For months, the world held its breath waiting for a diplomatic breakthrough between Iran and the United States, but those hopes have officially evaporated into thin air. Behind closed doors, the negotiations failed because neither side could agree on the critical energy quotas that keep the global oil market stable. This collapse isn't just a political disagreement. It is a declaration of economic warfare that will spike energy costs to levels we haven't seen in a decade. If you think inflation was bad before, you are not prepared for the supply shocks that are coming your way very soon.
As the deal falls apart, Iran is expected to pivot even closer to Eastern powers, effectively cutting off Western influence from some of the world's most critical shipping lanes. This shift means the Strait of Hormuz is now a ticking time bomb for every shipment of crude oil headed toward the West. Investors are already starting to panic, driving the price of oil toward the $150 per barrel mark, which will inevitably crush consumer spending power in the US and UK. You need to understand that when energy becomes a weapon, your savings account becomes the first casualty of the conflict.
While the world focuses on the failed Iran deal, the sudden and desperate calls for a ceasefire in Lebanon are serving as a massive smokescreen for a larger military buildup. These diplomatic pleas for peace often mask the reality that major powers are repositioning their assets for a much longer and more devastating engagement in the region. Do not be fooled by the temporary headlines of peace, because the underlying tension is still boiling just beneath the surface. For the savvy investor, this uncertainty is a clear signal that the volatility index is about to explode, and being liquidated is a very real threat.
This geopolitical instability is happening at the worst possible time for the global economy, which is already suffocating under a mountain of record-breaking debt. Central banks are backed into a corner where they must choose between saving the currency or saving the banking system, and they cannot do both simultaneously. With the Iran-U.S. deal debt, the cost of servicing this debt will skyrocket as risk premiums are adjusted across all global markets. This is the moment where the everything bubble meets the hard reality of limited resources and infinite printing of fiat currency. We are looking at a repeat of the 2020 supply chain crisis, but this time there is no government stimulus check coming to save your household budget. The failure of Middle Eastern stability means that everything from electronics to basic food staples will see a dramatic increase in shipping insurance costs. These costs are passed directly to you, the consumer, further eroding your purchasing power, while the elite move their wealth into hard assets. You must realize that your dollars are losing value every second this conflict remains unresolved, and the window to protect yourself is closing fast.
In times of war and failed diplomacy, gold has historically been the only reliable shield against the total loss of wealth and purchasing power. As the Iran deal collapsed sends shockwaves through the bond market, we are seeing a massive flight to safety by institutional whales and sovereign wealth funds. They aren't buying tech stocks or speculative real estate. They are hoarding physical gold and silver to survive the coming storm. If the big players are moving their chips to safety, you should be asking yourself why you are still holding so much exposure to the traditional stock market.
Is Bitcoin the digital gold we were promised, or just another risk asset that will dump when the bombs start falling? In this 2026 landscape, Bitcoin is showing signs of decoupling from the S&P 500 as investors seek decentralized alternatives to a failing fiat system. However, the volatility remains extreme, and any escalation in the Lebanon conflict could trigger a massive flush of leveraged positions before a real rally begins. You need to be cautious and avoid high leverage, because the market makers are looking for any excuse to hunt your stop losses during these geopolitical events.
The failure of the Iran-U.S. deal is the final nail in the coffin for the petrodollar system that has dominated global trade since the 1970s. As Iran and its allies move toward a BRICS-based settlement system for oil, the demand for U.S. dollars on the international stage will begin to plummet. This isn't a conspiracy theory. It is a mathematical certainty that will lead to hyperinflationary pressure within the domestic U.S. and U.K. economies. Your lifestyle depends on the dollar being the world's reserve currency, and that status is being challenged right now in the Middle East.
For those of you holding real estate, the failed Iran deal means that interest rates will likely stay higher for much longer than the experts predicted. High energy prices drive inflation, and inflation forces central banks to keep rates elevated to prevent a total currency collapse. This will continue to squeeze the housing market, making it nearly impossible for new buyers to enter and creating a liquidity trap for current owners. Your home equity might look good on paper, but in a world of 10% mortgage rates, that equity is becoming increasingly difficult to access.
Why would world leaders allow these deals to fail if the economic consequences are so dire for the average person? You have to understand that chaos creates the perfect environment for implementing drastic new financial controls, such as central bank digital currencies. By allowing the energy crisis to escalate, they create the problem and the reaction that allows them to swoop in with the solution. This solution will involve more surveillance of your spending and less freedom for your capital. Sovereignty has never been more important than it is today.
The market is currently pivoting away from idealistic ESG goals and pouring billions back into the military-industrial complex and traditional energy sectors. With the Lebanon ceasefire looking fragile and the Iran deal dead, defense contractors are seeing record-breaking backlogs of orders from governments around the world. While renewable energy is the long-term future, the short-term reality is dominated by whoever controls the oil and the weapons. If your portfolio is too heavily weighted in green energy and tech, you are likely missing out on the only sectors that will thrive in this era of conflict. So, what do you need to watch out for in the coming weeks as these geopolitical tensions reach a breaking point? First, watch the spread on high-yield bonds, as this will be the first indicator of a systemic banking failure triggered by the Middle East crisis. Second, ensure you have a significant portion of your net worth in assets that do not require a counterparty to be valuable, like physical gold or self-custodied crypto. Finally, prepare for a period of extreme social unrest as the cost of living outpaces wage growth by a wider margin than ever before. The trap is set, but you don't have to be the one caught in it.
The failure of the Iran-U.S. deal and the escalating situation in Lebanon are the final warnings of a global economic shift that will redefine the next decade. We are moving from an era of abundance and cheap credit to an era of scarcity, conflict, and high interest rates. The traps are everywhere, from the devaluing dollar to the collapsing bond market and the manipulated headlines of temporary ceasefires. Your only defense is knowledge and the courage to move your assets before the masses realize what is actually happening. Stay vigilant, stay hedged, and do not let the hope of diplomacy blind you to the reality of the charts. If you found this warning valuable, please subscribe to our channel, like this video, and share it with those you care about. Comment below with your thoughts on the Iran deal collapse. We must stay ahead of the curve together.